Since we were talking about the chemical sector, let's start the discussion with the management of Anupam Rasayan, who's joining us on the show. We only have Mr. Vishal Thakkar, the Deputy CFO, joining us right now, and hopefully Mr. Gopal Agrawal, the CEO, will also join us shortly to talk to us more about business. But Mr. Thakkar, in the meantime, let me come to you and start the discussion because you've signed a LoI with the Japanese MNC as well, and of late we have heard a lot of these big announcements and the tie-ups being done with global players. Well, could you talk to us about what's the revenue projection in terms of the contribution coming in from this deal in FY25? What are the other such discussions in the pipeline?
Yeah, hi. Thank you for getting us on the channel. And one thing that I want to take a little step back and see that over the last 6-7 years is what we have been investing into this geography, and with that we have been able to build a relationship over a period of time. We've created enough and more pipeline in terms of products, and I think that effort is really culminating into some results now. If you look at it, in last 18 months, we built a strong team there, local team and local presence there, which has also helped us in interacting with the customers better and capitalizing on the positions that we are there. And with our CEO, Mr. Gopal, also going there regularly over the last 12 months on a monthly basis has also helped us in terms of really crystallizing this business better.
Yeah, point taken. So, of course, we have been hearing a lot about in terms of these developments happening, and the team there on the ground is working towards us. But overall, in terms of the order outlook for FY25, which segment has been showing the maximum amount of traction, which geographies is doing well? Because the demand was subdued for a bit of a part of last year. Is it expected to pick up from the first half of this year itself?
So, see, I would not want to speak specifically about quarter to quarter because I'm in a silent period. Tractionally and directionally, I can say that yes, the overall market is subdued, as everybody knows. But Japan is one geography that has really worked well for us, and we are seeing a lot of buoyancy there. And America is another one that we expect that it would come up further. And if you look at my LOIs and contracts that we have signed over the last 12 to 18 months, you would see that kind of a reflection also there.
Right. Good afternoon, Mr. Thakkar, as well as we have Mr. Gopal Agrawal, the CEO at Anupam Rasayan, also joining with us. Good afternoon, Mr. Agrawal, as well. Let's talk about your order book outlook, Mr. Agrawal. For FY25, how is it looking like over there? Also, if you could highlight a bit in terms of the current pricing trend that we are seeing for the raw materials. What's the word on that?
Thanks for having me. Two things. So, as far as the trend is concerned, I would say a bit of kind of slowdown as far as, let's say, agro segment is concerned. But we are seeing enough and more traction, let's say, on pharma, on monomers, on personal care side of it. And hence, I would say it's a bit of a mixed bag. One could see, let's say, maybe a bit of headwinds as far as agrochem is concerned, maybe for next couple of quarters, which we were hoping to end by March. But yeah, I guess it's taking a little more longer than what we thought. So that's basically the overall trend, which is what I would talk about. As regards your question on pricing is concerned, I think if I talk about Anupam in specific, see, most of our contracts are basically, wherein we are, let's say, either the sole supplier or the primary supplier to our customer. And hence, for us, everything is a pass-through. To that extent, any change in, let's say, raw material pricing or otherwise, basically is a non-event for us because any benefit of raw material reduction will pass it on to the customer, and similarly, let's say if there's any price rise, which will pass on to our customers.
Okay, that will be passed on to the customers, but also, that concern now is coming around is that the China dumping seems like it's restarting again. So is that a bit of a worry for you? Is that something that would impact the company? We would see a bit of a subduedness in terms of the numbers?
Again, it's a good question. I would say if I was to talk about Anupam in particular, for us, that is again not a concern. See, most of our, customers with whom we are dealing, are basically the customers where, we have basically started kind of a manufacturing what they were manufacturing their own geography. So, for example, even some of the recent contracts which we are signing with our Japanese customer are largely driven where, they were manufacturing some of the products there, or they basically are innovating some of the products basically are getting passed on to us. So it's basically an effort, I would say, over anywhere between 4 to 6 years, where we have been working with them. And some of these products which are coming to us are, as I said again, going to be the product where we'll be either the only supplier or among the primary supplier to them. So hence, to an extent, dumping by any country or otherwise or geography could only have a minimal impact as far as Anupam is concerned. For us, these are basically products or contracts which would last, let's say, for minimum of anywhere between next 5 to 7 years. And hence, I would say to that extent, we are at least isolated, from some of those challenges which maybe some of our industry peers may be facing.
Okay, so that's good to hear. You are a bit isolated from those challenges as well. But let me bring, Vishal back into the conversation. Vishal, what about the balance sheet situation? Because you had raised the fund through preferential issue as well. You had a lot of capex lined up, but that was expected to get over in 12 to 18 months, and then you were expected to become debt-free. What's the latest in terms of the strategy? Are you on track? Because you had back your working capital reduction target earlier.
Yeah. So again, I would not get to the specific numbers of the quarter end and this, but I will talk directionally again because of the silent period that we are in. What we had said is that my capex plan is practically now to close probably in the next quarter or so. I should be able to close it. So that way, my capex plan goes smoothly completed. Coming to the debt side, what we had said is that we had raised a preferential issue and a warrants. So when the warrants of the balance amount of warrants, which is expected in another 3 to 4 quarters around, is when all the term loans will get to zero, or a net term loan debt will be my zero, and that is what is the target. Today also we have repaid enough of the whatever money we had raised from the preferential issue and from warrants have been used to repay the debt, and you will see the numbers trickling into my financial numbers that I report in a month's time.
Right. Vishal, I have just one more question that I want to know is in terms of overall, when you look at it, let's skip quarters, right? And look at the growth that one could expect from the company in the next couple of years. How is it that one could read this? That given that previously in FY23, obviously we've seen a good growth on a year-on-year basis. FY24, not that exciting, but FY25, 26 as a vision, what is the target that you all are keeping and what is the growth that one could expect?
Yeah. So I think the growth, if you really look at it, is that we believe that this year is the highest year. Give us a quarter more. Give us some time to really get there into the specific numbers. But if you look at it tractionally and directionally, I think the numbers will look. Growth should come back, and especially if you come from the contribution that is coming from Japan, contribution coming from the pharma and other segments, we believe that. The growth over, let's say, 26, 27, 28, if you're looking at those kind of a time frame, the numbers should look robust again in terms of growth.
So it was a bit of a hiatus year, but expect a rebound in the coming years. But Mr. Agrawal, will this rebound also come with better margins? Because of course, because of the top line pressure and the raw material issues, there was a bit of a crunch on margins this year. That is in FY24. What kind of recovery do you envisage in FY25, 26?
So as Vishal said, I think we definitely are showing a much positive, let's say, outlook from a long-term perspective, and that's also visible from some of these LOIs and contracts which we have signed, which will fructify, let's say, over next, what you call, maybe starting from next year till, let's say, next 4 to 5 years. As far as the margin is concerned, as I said, in my previous comment, for us, most of our contracts are basically a pass-through. So even while we had, let's say, a subdued, what you call FY24. But if you look at our EBITDA margins, they have been steady. And that is precisely the reason where, is the nature of the contract which we have with our customer. So while, of course, one could see a little bit of a pressure on an overall thing. But for us as a company in specific, given the nature of the contract, which is completely through with the customer, we did not see that bit of a margin compression. And going forward, of course, as I said, the delta for us would come, by increased revenue. While as the margin percentage, would more or less remain the same.
Okay, thank you so much, Vishal, as well as Gopal, for joining in with us this afternoon on ET Now, giving us an understanding in terms of the company, the outlook for the company going forward, as well as the outlook for the sector. Thank you so much, gentlemen, for joining in with us on ET Now. It's a pleasure having you both.
If you like this video, then like, share and subscribe to ET Now.